What is going on, Lucid fans? Welcome back to Financial Journey. So I'm going to start the live stream a couple of minutes early. Thanks for all joining. It is a lot to talk on. So I'm going to go over all the fun stuff that we need to know. Make sure you guys hit that thumbs up, subscribe, do all that fun stuff. Always greatly appreciated. For those of you that are replaying this, I'm going to have all of this chaptered, so you can always just skip right to the actual earnings, because as of right now, we have about 38 minutes until the actual earnings. So let's get right to it. I'm trying to comprehend how to best way to go through all this. So first and foremost, let's go through the earnings. Let's go start with that. So when it comes down to the actual earnings, let me just pull this up. So going through this, pretty simple. We already knew the production delivery numbers and all that fun stuff. As far as revenue, did come in exactly kind of with the forecast, so 195.5 million. As far as demand, this is a red flag. So, you know, on my channel, I like to give you the no BS, the good, the bad, and the ugly. So if the ugly is ugly, I like to call it out. You have to factor in, during Q3, we opened up Europe, had several events in Europe, all bringing up demand. And so these are all some of the events. So keep in mind, up to September 30th, we had a ton of pop-ups, ton of new actual studios. Europe we really pushed in Europe as well. Saudi Arabia, starting deliveries, but yet we come in with 34,000 reservations. And also, I've never been a big fan of it because I personally like to see, and I would always want to see more production. So they're definitely going in the right direction as far as that goes. But Sapphire, in my opinion, is a very big mistake, and this proves it. So there was a lot of people when that came out saying there's going to be so many people signing up for this. There's going to be reservations through the roof. Well, looks like reservations went to hell, unfortunately. So reservations very much low considering everything that was opened up in Q3. Definitely not a good sign by any means. And even though our launch event and a lot of PR has been coming out saying they're going to be talking on the Gravity, well, reservations opening in early 2023. Q2, they said that they're trying to find the best way to roll out and take advantage of the huge demand for the Gravity, but looks like they're pushing that back. Definitely not positive there. As far as cash, so they have 3.85 billion, meaning they most likely will need cash. Again, I'm trying to orchestrate this in the right way. Unfortunately, that leads me to this. Unfortunately, it's not the good thing. They are diluting, so they're double hitting us right now. Keep in mind, this is included in part of the shelf offering. So within the shelf offering, they can do up to $8 billion. And so they did about 600 million as of right now. And this is going to be through these kind of holders. So Bank of America, Barclays, and Citigroup. So yeah, we're getting diluted. I haven't actually particularly looked at this per se exactly why they are intending on doing this. There's a ton of pages in here. But regardless, I guess first and foremost, people don't necessarily care. So I did have a lot of discussions with some individuals leading up to this, and they got my 2 cents and interpretation. Actually, I'll just double check, make sure everyone can hear me, I assume. Yeah. Okay, so I had some discussions with some individuals prior to these earnings, and they asked for my thoughts. And I think Lucid is in a very tough scenario right now. So obviously their actual conference is going to be in around 30 minutes, give or take. This is a good opportunity for them to hopefully recover from this. Because keep in mind, right now we are down 11.3 or 48%. So at the end of the day, even if Lucid does say some positive things, or even if, say, they want to expand to expectation, well, guess what? That's going to be perceived as negative. And funny enough, I did say to a couple individuals leading up to this that any positives are going to be converted to a negative because, meaning they'll need money. So I guess I kind of knew this dilution was going to be right around the corner, but there's going to be a lot of negatives about this upcoming earnings. We just have to see the finite details behind the scenes, and hopefully should see some at least improvements, because when it comes down to a pre-production or I guess I should say a newer company, not pre-production, but you need to look at the finite details and if they are actually improving. So for instance, looking at the earnings, they increased the actual the production. So they're increasing production. That's definitely good. It actually does lay out right here. They're doing can produce 300 cars per week. So about 42 vehicles, 43 a day, give or take. I think that works out to be right. Yeah, I think so. So about 43 a day. Again, there's always going to be a lot of negativity around this. And keep in mind, earnings are a very interesting beast. You get equal amount of people that will see that 300 as a very good positive, like good job, Lucid. You'll get opposite end, be like, well, that's only 42, 43 a day. Like you need to be at 50 something or 60, especially considering one of the questions that they are going to be getting asked, since it is the most voted question, what is your production targets for 2023? And right now, the estimate is 49,000. That's based on their 2021 targets. If, for instance, they do cut that, then anticipate us to go down a little bit more. So who knows? So given the nature of the earnings and what's come out of this, it's not looking too optimistic. I'm just starting to go through the actual earnings just to see, but unfortunately, based on the websites I see, it's not really showing up. It's all blank. So we just basically have to go off of their actual earnings. So they gave some highlights here. I can tell based on all of this, though, they're being very vague. And sometimes vagueness is not good. So once again, I think we kind of knew this as far as improvements versus over Q2. Definitely there is some, but whether it's sufficient enough to keep us afloat, I don't know. And keep in mind, this is everyone's nightmare about dilution, especially 8 billion. So keep in mind, our market cap right now is 23.31 billion. So you have to factor in if they potentially do a share offering. And actually, I will pop open one additional thing just so you guys can put that in perspective. So as far as this goes, so they have 4.29 billion in cash equivalent short-term investments. And as of right now, this isn't updated, but this is based on Q2. They're burning 1.61 billion. So logically, this is why I've always said, if you factor all that in, they have up until arguably maybe Q2, pushing it Q3 of 2023 before they needed more money. As I've always said for a long time. Looking here, they have 3.85 billion. So arguably they are kind of being a little bit more efficient. So their burn rate is going down a little bit. So that could be a positive sign. Keep in mind, like I said, the actual true earnings aren't really showing up on my paper, but I think there is some opportunity here, so take advantage. I do have some cash on the side, so while the live stream goes, I'm going to definitely, we'll see where it lands ultimately, but I might pop in and buy some. But let's take a look at this. Seahawks, I completely agree with you. Nolos, so ultimately, lots of... We're tanking, in case you guys are just joining, for several different reasons. One of which is plain and simple dilution. So even if you take away the actual earnings, whatever it is, dilution theoretically dilutes and so causes the stock to go down. So 600 million dilution is never potentially good. So this is one factor that is being played into everything. Earnings, there are some positives if you want to think about it. So in case you guys are just joining, so as far as production numbers, 2,282 for production, revenue 195.5. So definitely it's a little bit on the low end. As far as earning per share, it did come in at negative 40 cents versus the estimates was negative 44. Reservations, that's one negative aspect so far, at least how I see things. Of course, you guys might see it differently. I completely disagree with how they say strong demand, because that's been around for a while. So in case you guys don't know, it was 37. So the fact that, of course, you have to factor in that some of the reservations got taken out because of actual orders and so forth to some extent, but we're 34. So 34,000 reservations as of right now. Keep in mind, we did really push in Europe, had a lot of big events, not necessarily just as well Europe, but even in North America, a lot of these pop-up studios, which normally the studios are showing that they are doing what they are intended to, bring in demand, bring up reservations, things like that. But these pop-up studios looks like they might be a fail, might be a waste of money, possibly. Again, I'm more of an analytical thinker. So I like to look at the overall revenue, other data behind the scenes, and see, is it worthwhile for all these studios? Is it worthwhile, blah, 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 for these kind of things? So they might have to rethink as far as if these pop-up studios are beneficial in the grand scheme of things, but I did videos, estimations, and I was assuming around 45,000 for reservations was very realistic. So 34, very much low. And Gravity, so funny enough, they are having their launch event on the 15th, and they keep pushing as far as PR for the Gravity. Well, reservations in 2023. So they might give a PR, or as far as they show the prototype of the Gravity, or at least what it's going to look like. That might incentivize customers and kind of rehype investors. But pushing reservations to 2023, not always a good sign, in my opinion at least, especially considering in Q2 they did say that was... They acknowledged the massive demand that was around the Gravity. Even myself, out of any of them, I probably would orient myself towards the Gravity versus the Airs. So definitely a lot to talk on. 3.85 billion in cash equivalent short-term investments. It is interesting to see that they do not talk on debt here, how much their debt load is. So another point that they need to really bring up. Actually, is this? No, this is just their PR stance. Oh yeah, here's some cash equivalents. Okay. Up to September inventory went up a lot, which makes sense. Short-term investments. Okay. Let's see. Long-term debt. Okay, so long-term debt, as you can see, total debt was 2.24 billion. That's 2.2 of that is low-cost financing for up until 2026 at 1.25%. So that, out of anything, that's the best type of debt to have, unless the PIF wants to give for free. But still, as far as okay, so it looks like debt did go up a lot. Not a lot, but a little bit more. So based on last earnings, our operations burn rate is 1.6 billion. I estimate right now it's close to round one. So they definitely did improve on things, but I don't know. Let me know your thoughts on this. Clearly, like I said, there's different ways to interpret a lot of this. You might completely disagree with what I'm saying, which is true. But you have to look at some of the finite details. So days like this is when you need to really look at, is this something that you really need to factor in? Is that, like, I know a lot of people are going to really piggyback off of this debt, this issuance of 600 million, and really kind of go with that and see that as a negative. But you have to factor in, Sherry has mentioned the last 3 earnings, I think, that we will need money by 2023. Of course, 2023 is just kind of a benchmark. It could happen anytime, and it's all relative in the grand scheme of things. So you have to think long term, is this really going to affect you where it is? So as of right now, currently down 14.3%. We are very much in a spiral, plain and simple. So yeah, it looks like since we are breaking below this point, the technicals, so most likely around the $11.80, around that, we're going to bounce off of. More so, that's where our support is. Actually, conveniently, you see that right here as well. So 1180, whether we hold that, again, we'll see. So one negative as well. So like I said to you guys, I had a couple discussions with some individuals prior to earnings. So if you guys ever want to chat, I can just message me on Twitter, Discord, whatever it is, and I'd be more than happy. I love talking stocks. So one negative that I possibly foresee is, I've said in a lot of videos, it's good to have our retailers that have the power. So right now we typically get around three questions to ask. So we get to ask a genie potentially. So these 3 questions that we do have that are most voted: what is the production target for 2023? Actually, I guess one thing I just should say, all these questions coming from an investor stance, it's one of those things that We want to know, but do we really want to know? So keep in mind, we're in a little bit more of a spiral right now. And if we ask this question, what is production target for 2023? Right now it's 49,000. They haven't changed that. If for any reason they say, you know what, we're going to cut it down to 20, look at what happened on the previous earnings when they cut our production targets. Plain and simple. So that's not good. The railway is a very good question. And this is one question as well. Very good. I want to know, but I guess I'm a little bit more different. I have a long-term investment mentality, and I guess I've been through a lot of crappy companies, and I know the good, the bad, and you have to take things with reason. But this might be another question that we might not want to know the answer for. So Bears Workshop's done a very good job of showing flyovers and things like that, but there's a ton of vehicles sitting there. So is this discrepancy between the actual production numbers? I think it was 2,298 versus 1,398 delivered, if I am close to that. But is it fit and finish? I want to know that. Hopefully they don't say that. Please, Peter, like out of anything, just don't say that. Like, please, please, please. But hopefully they don't say fit and finish. That would be absolutely horrible. One thing out of the best answer that I could hear from them is that there's a supply problem for car haulers. And keep in mind, based on the last couple of CPI data that's been coming out, or the reports are all pointing to that it's very costly for transportation. So logically, is it associated to that? What is that? I don't know. If they say it's due to car haulers and supply of that, you know what? It sucks, but is it Lucid's fault? Not really. Not necessarily. But if they say it's fit and finish or some other point, then yeah, unfortunately that's going to cause us to go down. So keep in mind, this is where it's good that we have answers for these questions, but in the end, is it going to help the stock price? Depending on how they say it. So it looks like we're down 16.25%. Like I said, we are in a very big spiral as of right now. No matter what, I don't think this is good. And like I said, this right here is what their snapshot is their highlights. And even their highlights are bad. So anticipate a little bit more of a downtrend. Of course, I always like to stay optimistic within reason, like I always say. But like I always say, I like to give you the good, the bad, and the ugly. Okay, so I'm gonna, let's see. Give you a good breakdown, most likely as well. So I'll take a look at unusual whales just to see what is happening as well. Okay, so as far as the flow for that, multiple things, so stick with me here. So shorts are pretty flat. So keep in mind, after hours activity hasn't updated yet. So the fact that they only increased 110,000 shares is pretty good. They themselves, the shorts, did not know where this was going. So again, depending on how you see that, that might be okay of a reasoning. But as far as what's happening on the dark pool right now, let's take a look. A lot of people are buying Disney, but pretty flat as well. So I always like to see what's happening in the dark pool and all that fun jazz. So this time around, I am going to, as far as the earnings, in case you guys haven't listened in when I do earnings, I'm going to mute myself. You guys don't need to hear me. Just let Peter and them talk. At that stage, I'm going to, afterwards, I'll chime back in and go over it. I'm just going to have, since they don't really go through the slide presentation, it's just audio only, I'm going to have this ticker go in the background so you can kind of see. You'll be able to see when they say things, how the market's really interpreting it. So if you see a downtrend, clearly the market doesn't like that. Plain and simple. I guess first and foremost, let me know your guys' thoughts, and if you've been buying, you are buying this dip, let me know. I particularly thought I had a good average. I did have 1330, so I got very, very lucky. But how things are going to play out, we'll see. Most likely there will probably be a dip tomorrow, but depending on what is said in the earnings, we potentially could have a little bit more of a worse day on our hands. But at the end of the day, it is what it is. In case you guys are just chiming in, so 600 million for dilution was also laid out as well, paying 2% commission. I guess the the actual call does start in roughly about 3 minutes, or at least you can enter in at that stage. So let's see. Okay, so about 600. Okay, nope, that, find more information, don't need that. Special notes regarding forward statements, don't need that. That's just basic terminology summary. Okay, that's just the about. And then they start, I noticed that they did this with a 8 billion shelf offering. They started because they started to consider themselves a controlled exempt company. So typically, when it comes down to, has to get certain, I believe from what I read, has to get certain SEC approval on various things and whatever it is, but them being a controlled company, aka by the PIF, as long as the PIF does rubber stamp it, then potentially, then this is, they're free to do whatever they want. Keep in mind, they already did get approved for that 8 billion shelf offering, so they can do as many offerings as they want, as they wish, up until potentially that is fulfilled. So that's something you might just be aware of. Up to 915 millions of shares. That's not good. Private placement. Then okay, so it looks like they do touch on that. Additional shares. Okay. Yeah, I'll definitely have to take a look at this. There's a lot of things that you don't want to miss. Oh, it is having a little bit of a bounce, a little bit. Okay, so I'll take a look at the chat, see how you guys are doing. Let's see. Touch Jose, yeah, touch 1150. Let's see. Puma block, do you think that we're slow? Let's see. Do you think we risk slowly not growing and dying? Well, when it comes down to that though, when it, like for instance, any stock that has like offers a product, you have to factor in, is that demand going to, over the next 6 months or possibly over a year, is that demand still going to be there? Based on everything, it doesn't matter if there's a higher inflation or interest rates, demand is there. So we have a good product. As I've said, people disagree with me quite a lot when I do videos on this. I always say they need the pure. They need lower price vehicles. They've even said in Q2 earnings, the majority of all their reservations is the pure. They need to get a lower price vehicle out. I don't like the Sapphire. I get that we want to showcase our performance and we have good technology, but nobody's buying that. Nobody cares about that. It's the wrong time for that, wrong time to showcase all of this. Like we have a good competitive advantage right now. We need to take advantage of that. And one way to do that is on a mass scale. So that's something. As far as dying, no, I don't think we're dying. It's just, we are still a newer company and newer companies need money, plain and simple. So as far as this issuance, what just was came out, I think that was expected. Personally, how I interpret things and based on what they just recently said that they have for cash, we're going to see more dilution probably in Q1 2023. Because they currently have right now 3.85 billion. They're going to burn through that by most likely a little bit later on. So Q3, probably 2023. So just to take advantage and be prepared, you never want to dilute last minute. You want to always be a little bit more ahead of the game. So I can see that happening in Q1. Maybe they're anticipating that. I'm not sure. Once again, analysts will be joining us as well. So based on this is Q1 earnings, 3 analysts did join us. So Citi, Redburn, and Bank of America. Q2, we had Bank of America, Citi, and Redburn. So same ones. We'll see if the same 3 play out. And just so you guys know, I know it looks like 3 maybe might be the cap, but unlimited could join. So there could be 20 if they really wanted it. So again, if you guys haven't participated in Lucid's earnings before, they are relatively fast because of the lack of questions coming from the actual analyst. So it's about a half an hour, 45-minute round trip, all of that fun stuff said. And actually, I'm going to join this, but it doesn't start for another 13 minutes. I just get to listen to some fun music in the background. But like I said, I'm not gonna, since they don't really have a PowerPoint slide or anything, I'm just going to have this going in the background so you can see the ticker, and whatever they do say, hopefully will show that. So it looks like we've found a pretty good base for the most part. Okay. Let me know you guys' initial thoughts on this. My reservations with Lucid, like, as I always said, I made this channel just for fun, hopefully to make better investors. Prior to this YouTube channel, a lot of people generally ask me for recommendations and just what to look for. So that's why I do. So this is why sometimes I list a lot of data. You guys interpret that. If you find it relevant, it is what it is. I most likely am going to say that this is going to be a very negative earnings. Peter is not the, you can tell he's a smart guy, very smart guy. But the fact that based on, I'll just show you right here. Where is it? Right here, Sherry House. And all of this was public, came out about their earnings. She gets paid so little for what she does. She honestly saved them in Q1 and Q2. Peter doesn't know how to answer difficult questions. He stutters quite a lot, and then he just gives very vague BS stuff. And us as investors, same as you guys, everyone, when someone is given vagueness, we will interpret it automatically, speculate. That's what the market does, and that's what the market will always do. 20 years from now, 50 years from now, we'll always do that. So again, you have to factor in that they have to answer fairly smart, the questions. So they have to answer for lack of demand, even though they're calling it strong demand. They have to answer for that. The fact that hypothetically, based on, I think, the actual construction, they aren't going to have anything up until, I think it's tail end Q1, at least, for them to really start pushing a little bit more. But they seem to be boasting about 300 vehicles a week, works out to be about 43 a day. So if that is a good, accurate representation of how much they can do, that is around, I think, the 20,000. I think around 55, if I did the math correct. 55 works out to be about 20,000 a year. I could be wrong though, but this is just going in my head right now. But previous estimates was 49,000. So we are going to have a very tough realization because this is the most voted question. So they are going to answer, what is your production target for 2023? And if they do not say anything other than 49,000, or if they say some BS like, oh, we're going to analyze and evaluate our circumstances closer to that date, so either announce it during the Q4, market's going to instantly think that they're cutting. Guarantee that it's going to go down because of this answer. And hopefully Sherry steps in and saves it or something like that. But so that's a very bad. It's a good question for us that we need to know for investors, but it's plain and simple, it just sucks. We are bouncing back a little bit. Maybe I will step in and buy a little bit. I'll just log in. I'll just log in right now, and I'll buy a little bit just to keep in mind though. I have there you go, facial recognition, fun stuff. But I have a different mentality, just so you guys are aware. I like to invest long term, so them going down as much as they are right now, it's good for me. And plus I did purposely have some cash on the side just for this exact purpose. I had a weird feeling. I'm normally very optimistic, but somehow just this earnings, I had a very bad feeling. There was I don't know. Okay, I'll wait till that loads and then I'll see how much I'll buy. Yeah, Mike, 600 million, in case you guys are just joining in. There is a little bit more dilution, 600 million. But I think, again, for those of you guys that looked at the balance sheets and all that other jazz, it was anticipated, especially sooner than later. Because no company ever does it last minute. They for sure needed money Q3 2023. I would have estimated it would have been in Q1. But again, it's all relative. So they have had 4.29 billion in cash equivalent short-term investments, and as of right now, they have 3.85 billion. Keep in mind when companies do announce a 3.85 billion, they group these together. So they group cash and long-term together. So it might be actually lower than the 3.85 broken down. Rob, I actually really like Tesla at these prices. Personally. In general, as I typically say, I like the demand for EVs. It seems to be very elastic compared to a lot of other sectors, especially in a higher interest rate environment. Inflation, CPI is also coming out this Thursday, so that'll give us a good indication. But yeah, we'll see how this all plays out, though. I do see the ask frequently drop down to $12.63 though. So in case you guys are just joining as well, so I'm going to mute myself. Starts in about 6 minutes. Let the people talk. Afterwards, I'll go over what in reality is good, the bad, the ugly, some highlights from that. I'm going to have this going in the background as well so you can see exactly the ticker, exactly where it's going. So if the market likes something, it'll clearly let you know about that. Yeah, it'll be, and I know some of you guys like my technical analysis, which I love doing technicals. I feel like if you take a lot of the external factors, it's very easy to determine where we're going. And since we are breaking below basically we have no support at this stage, or at least it's unknown. So that might be fun times ahead. So let's see. Let's see. Chris, what about those reservations like mine converted to orders? Won't be able to claim the 75. No, I believe they're going to grandfather that in, so that still works. So you still get that 7,500. You are right, PLLC. The market is very saturated, and that's why I've said we have a very good competitive advantage right now, and we need to take advantage. We can't just be sitting there expecting the gravity to, or not the gravity, sorry, the sapphire to save us. Like, I'm all for definitely very good, efficient performance vehicle, but that's not realistic by any means. Okay, so I end up buying a little bit more, so we'll see how that goes. I'll just hit refresh on this. We'll see where we're at. Okay, so 1180 still, so 14.8% down. Crazy after hours. Oh, that's not really showing right. There we go, that's right. At least we clearly know the support, like I said, 1180 is something. So even though we do temporarily break below a very big support level, the fact that we're still holding it is a good sign. 𝗖𝗓𝗡, yeah, I completely agree. Mass production is definitely. Sarge Tesla, probably, if I was to say a rough estimate, would be 150. Marbat, I have two different accounts, or two different tabs open, so I can see all this chat right here, whereas that way it doesn't affect you guys. Was it? Actually, I don't think I even placed a official order yet. No. Okay, so 1182, let's do, I don't know. How many? I'll do 300 just to start. Yeah, okay, so 300, $11.82. No, it was just sitting there. It's not filled. Okay. Oh, that's probably why it went up a little bit. Okay, so I put it in at 82. Starts in 2 minutes though, so we'll see. Based on what they say, might have a little bit more fluctuations after that too, but they definitely need to deal with their production. 1,000,000%. So like I said, and I'm going to mute myself. You guys are just going to watch this ticker. So $11.90, clearly a nice little pickup going on here. Yeah, let's see, I'll just refresh this, see if there's any dark pool transaction that's happening, any substantial ones. Nothing. Nobody's buying after hours. Maybe they're just waiting. Yeah. To be honest though, I'm very curious because they're just gonna, Peter is just gonna try and fluff this up. So we just have to take that with a grain of salt. But these questions, I'm very curious. So the most voted questions, what's your production target for 2023? When are you starting or planning to start building and utilizing the railway? I did a lot of due diligence on this, and hypothetically us connecting to the UP and shipping it, like we can save so many, 40% roughly on costs. So that is I would put that as a very top priority if I was Lucid. And there was one question on one of my videos as well, who's responsible for the cost associated with that? And it's technically Lucid, just so you guys know. And I think they are starting now. No, they're not. And then third question, looks like there's about 1,000 cars that have been produced and not delivered. Why is that? And where are they stored? So definitely that's another good question. But in case you guys are just joining, they have about 34,000 in reservations. They consider that strong demand. Definitely not strong in my opinion, considering we had a ton of actual events to hopefully boost the reservations, and that was as well in Europe. So maybe Europe's not going as well as planned, potentially. And over and above that, maybe, I don't know, clearly Sapphire is failing, and at least I'm under the assumption, I could be wrong. Maybe I would absolutely love, because the profit margins on the Sapphire are a little bit fatter, so around 18% versus the Pure, probably around the 13-14% profit. So clearly the more Sapphires that they sell, the more beneficial. So ideally all these would be Sapphire, maybe, but we'll see. We will see. And they're 1 minute behind. We'll see what happens as far as the market. Oh, you did 300 too, Selden? Smart, me too. John Reed, can you tell these people why 35 to 45? Oh, earnings is starting now. Someone just joined briefly. No, Jesus. Okay. 35 to $45. As far as reservations, is that what you're talking about? Yeah, we'll see. Yeah, Sam, a partnership would be very, very beneficial at this stage. Sarge, nothing. And in reality, I don't know. It's very, even the rumor that's been floating around saying that Lucid's been able to do 40 to 50 vehicles per day, well, they kind of just myth buff themselves. Okay, it is starting, so I will mute myself.
Thank you for standing by. Welcome to Lucid third quarter 2022 earnings conference call. At this time, all participants are on a listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask the question during the session, you will need to press star 11 on your telephone. I would now like to hand the conference over to your speaker for today. Maynard, you may begin.
Thanks, Tawanda, and welcome to Lucid Group's third quarter 2022 earnings call. Joining me today are Peter Rawlinson, our CEO and CTO, and 𝗪𝗓𝗧𝗛, our CFO. Before handing the call over to Peter, let me remind you that some of the statements on this call include forward-looking statements under federal securities law. These include, without limitation, statements regarding the future financial performance of the company, production and delivery volumes, macroeconomic and industry trends, company initiatives, and other future events. These statements are based on predictions and expectations as of today, and actual events or results may differ due to a number of risks and uncertainties. We refer you to the cautionary language and the risk factors in our quarterly report on Form 10-Q for the quarter ended September 30th, 2022, and the forward-looking statements on page 2 of our investor deck available on the investor relations section of our website at ir.lucidmotors.com. In addition, management will make reference to non-GAAP financial measures during this call. A discussion of why we use non-GAAP financial measures and information regarding reconciliation of our GAAP versus non-GAAP results is available in our earnings press release issued earlier this afternoon, as well as in the investor deck. With that, I'd like to turn the call over to Lucid CEO and CTO, Peter Rawlinson. Peter, please go ahead.
Thank you, Maynard, and thank you everyone for joining us for our third quarter earnings call. Now, I'm delighted to say that we've made significant progress towards achieving our 2022 production target of 6,000 to 7,000 vehicles. In Q3, we achieved a record quarterly production of 2,282 vehicles, more than triple that of Q2, and deliveries of 1,398, which is more than double that of Q2. I want to extend a heartfelt thank you to everyone at Lucid for your collective efforts, which have been central to driving these meaningful increases as we scale and ramp production and deliveries. You continue to play a key role in the progress of our production ramp, and in so doing, help getting more customers behind the wheel of their new Lucid Airs. Now, in Q2, we weren't in a position to give you a figure for a weekly production number. But today, I'm pleased to announce that we've now proven our ability to produce 300 cars a week. And even more importantly, we have a visible pathway to our next incremental production rate. And this has been a huge team effort, drawing upon talent from right across the company. We've made some difficult decisions and some systematic changes to the organizational structure. And I think now that the results are beginning to speak for themselves. We're working very hard to control what we can control, but the supply chain situation remains fluid. In fact, even now we're experiencing a challenge with one particular item that will lead to some very temporary time out for the line. However, we believe we can still achieve our 6,000 to 7,000 production guidance for 2022 despite this particular issue. And during this time, we'll implement a whole batch of improvements that will further enable us to produce even more cars. So Turning to logistics, we believe we've made significant progress in our plan to bring our logistics operation in-house and to restructure our logistics and manufacturing organization. We addressed some of the primary gating factors that impacted production in the second quarter. Steve and David and the new leaders we put in place have been doing a very good job, providing valuable leadership in executing this transition. But whilst I'm pleased with our progress, we do have more work to do, but it is my privilege to continue to personally lead this important team effort alongside the incredible team here in Arizona. So in fact, I'm joining today's earnings call once again from AMP1 in Arizona, right off the factory floor where we've been very busy. Just last week, we commenced production of the Lucid Air Touring, and I'm looking forward to personally deliver the very first one to a customer next week. Touring is our 620 horsepower dual motor all-wheel drive version of the Air with a 0 to 60 of around 3.2 seconds. And whilst I'm very excited to be able to offer a more affordable version of Air with Touring, I'm equally as excited by Lucid Air Pure, which will be our most affordable Air variant with up to 480 horsepower. We're on track to start production of Pure soon and expect to start delivering the first of these vehicles before year end. So stay tuned next week for our Lucid launch event for a lot more details. But I'll give you a little sneak peek with some numbers. We've talked about Grand Touring getting an industry-leading 4.6 miles per kilowatt hour. And now I'm happy to say that Touring will be able to match the landmark 4.6 miles per kilowatt hour efficiency of the Grand Touring, albeit at a more affordable price point. And that's an important incremental step to bringing ultra-efficient EVs more attainable. And we will continue to push relentlessly to get closer to what is our aspirational target of closer to 5 miles per kilowatt hour for a Lucid Air. Now, this incredible efficiency is driven in large part by our in-house developed powertrain tech. Many of you have heard me say this before. This truly is a technology race. And not all EVs are created equal. We at Lucid enable more miles per kilowatt hour of battery. And this allows us to provide world-leading range with a smaller battery, and so offer exceptional rear seat ergonomics with a deeper footwell in both the Touring and Pure models. And we continue to garner external validation of our technology prowess through such recent awards as Top 10 Best Engine and Propulsion Systems from Wards Auto. But we're not stopping there. In Q3, we introduced the 𝗪𝗧 brand, Lucid's new high-performance, driver-focused brand. 𝗪𝗧 represents the pinnacle of electric performance, finally achieving the satisfactory performance that I've so long searched for. Air 𝗪𝗧 will be the very first Lucid product to bear the 𝗪𝗧 name, and will build upon our technical prowess to take electric high performance to next level. At the heart of Lucid Air 𝗪𝗧 is the 3-motor powertrain, the first from Lucid, featuring a brand new twin-motor rear drive unit and a single-motor front drive unit, all developed and manufactured in-house by Lucid. And make no mistake, in terms of performance, efficiency, and compactness, I believe these are truly state-of-the-art. The twin rear drive unit introduces new heat exchanger technology and heightened coolant flow rate. In addition, the battery system is upgraded for higher power and more precise thermal logic. And with over 1,200 horsepower, Lucid Air 𝗪𝗧 is not only the most powerful electric sedan in the world, it is the most powerful sedan in the world. We're regularly testing Sapphire now. In fact, I'm currently personally test driving Sapphire, and I'm satisfied with the progress it's making. We expect to start production in the first half of 2023. We're also delighted to say that Project Gravity SUV will be ready to be unveiled soon. We're planning events in early 2023 and will begin taking reservations from that moment, ahead of the start of production in calendar year 2024. So I'd go so far as to say that I believe the performance metrics of Gravity are going to be unsurpassed within its class, further demonstrating our technology prowess. We're going to take the same space concept, the range, the efficiency, technology, design elements and performance, and apply all that to create what I believe will be truly a landmark SUV. We're readying our factory through phase 2 here at AMP1 in Arizona. Specifically, we're expanding the north end of the body shop to get ready for Project Gravity and the south side of the building. The new assembly halls where we'll run both Air and Gravity down that line. Now, I believe Gravity can have as much, if not even greater impact upon the SUV market than that Air has for the luxury sedan market. And I cannot wait to share more details in the not too distant future. Stay tuned for our launch event next week, where we'll go through the Lucid Air line and provide a sneak peek on the Gravity SUV. Now, while I'm very excited by our vehicle roadmap, I'm also thrilled with our software progress, and in particular, the latest UX 2.0 release. We made a very conscious decision to design Lucid Air from the beginning as a truly software-defined vehicle. The synergistic integration of software and hardware engineering results in a vehicle that can get better over time, long after customer takes delivery, through simply receiving an over-the-air update. Now, during the third quarter, we released 14 over-the-air software updates, more than one per week. Our latest over-the-air software update is the most extensive to date, with significant advancements and improvements across the vehicle. New features include instant on-glass cockpit and pilot panel displays, launch of highway assist for the Dream Drive Advanced Driver Assistance System, improved on-screen layouts, and indeed many other features. But I think it's very important to highlight that Lucid Air has always had world-class software. You've likely just never seen it. It's the software that drives the powertrain, the software that manages the batteries, all the software that controls the critical components of the vehicle. In addition to our in-house manufactured technology, software is a key element to Lucid Air's unheralded performance and efficiency. Put simply, we'd never have achieved an EPA estimated 520 miles in the case of the Dream Edition range had it not been for this software. And of course, these components are all over-the-air updatable as well. Our world-class software team, led by Mike Bell, will be releasing many more features in the very near future. In fact, just last week, we announced Sirius's XM's radio audio entertainment experience will be a standard in-dash feature across the full lineup of Lucid vehicles. The beta will be available at no cost to Lucid owners, and in 2023, we expect to deliver the full implementation. Lucid owners will receive a full 3-month trial subscription. As everyone may be aware, my bigger picture vision has always been to establish a Lucid group of companies that encompass not just cars, but an energy ecosystem as well as a technology licensing. And these are the 3 pillars, if you will. So we recently launched our Lucid vehicle accessories, which includes the Lucid Connected Home Charging Station, the first step into the company's future energy ecosystem. This at-home charging solution can support up to 19.2 kilowatts of electrical power, which enables charging of up to 80 miles per hour to match Lucid Air's industry-leading fast AC charging rate. The home station will effectively double the rate at which the Lucid Air can be charged when installed at full power compared to the included charging cable. Now, the charging station is also equipped with hardware ready for bidirectional electric power and is Wi-Fi enabled for future over-the-air updates. Turning to our battery strategy, I'm delighted to announce that we recently validated battery cells with another global battery supplier. We expect this agreement, along with our existing agreements with LG and Samsung, to give us sufficient cell supply both in 2022 as well as 2023. And we're working on long-term supply arrangements with numerous suppliers. Indeed, I'd like to take this moment to thank all our suppliers who worked very hard with us during these challenging times. So, to sum up, I'm incredibly proud of the Lucid team and what we've accomplished despite the many challenges that we and the industry faced. In just a short amount of time, we brought our logistics operations in-house, we restructured our logistics and manufacturing operation, we brought in exceptional leadership, we've addressed some of the gating factors impacting Q2 production, and we delivered on the software experience one would truly expect of a Lucid Air, and launched our technology division. And I believe we're only just getting started. We'll deliver variants across the performance and affordability spectrum with Sapphire, Touring, and Pure. We'll begin on our global expansion with the first deliveries into Europe and into Saudi Arabia by the end of the year. We'll unveil Project Gravity SUV early next year, and we'll continue to focus on extending our unsurpassed technology leadership. Lastly, and most importantly, I'd like to thank our customers for your faith in us. I've met a number of you and your families, and your feedback and delight are really a part of what drives me and the whole team here to deliver the quality and experience you truly deserve. We're ramping production as quickly as we can to get more vehicles into the hands of our customers. And I want to reiterate that I firmly believe we're on track to achieve our 6,000 to 7,000 vehicle production guidance for 2022. And with that, let me turn it over to Sherry for an update on our financials.
Thank you, Peter. And thank you to those who are taking the time to join us today. Before sharing our Q3 results, I'd also like to extend my sincere gratitude to our customers, as well as our entire Lucid team members, our partners, and our suppliers. In Q3, we scaled across every corner of our business, from manufacturing and engineering to G&A, sales, and service. We've made tremendous strides in our production ramp. We launched our new Sapphire brand, introduced additional product features, and worked to enhance our customer experiences through our expanding sales and service network. All of this strong progress was only possible through the perseverance and collaboration of each and every one of you, and I'm incredibly proud to work alongside you. Now, turning to our third quarter financial results. As Peter mentioned, we produced 2,282 vehicles, more than triple our Q2 production numbers, and delivered 1,398 vehicles, which was more than double Q2. The variance between production and deliveries is primarily a function of vehicles distributed across three areas of the delivery process: vehicles in transit, vehicles awaiting pre-delivery inspection, and vehicles awaiting delivery to a customer. As we mature as a business, we'll continue to learn and refine our in-transit inspection and delivery processes. Though in the near to medium term, we expect vehicles produced to pace at a higher volume than vehicle deliveries as we accelerate our production and we initiate international deliveries in the fourth quarter, the latter which requires longer in-transit times. We continue to have strong demand with more than 34,000 reservations as of November 7th. To put the reservation number in context, this value equates to the amount of our current annual tooled capacity in AMP1. This also compares to the over 37,000 reservations we had in Q2. The reservation calculation includes new reservations, nets out all deliveries that we accomplished in Q3 and Q4 to date, and also nets out cancellations. It's important to note that this number does not include the up to 100,000 vehicles under the agreement with the government of Saudi Arabia. We expect deliveries to start next year. Meetings have been ongoing with the government, and we're actively working on scheduling of the first deliveries. We also have not opened up reservations for Project Gravity SUV. We expect to start taking reservations in early 2023, opening up what we believe will be a very large and incremental addressable market for us. Our ultimate goal is to sustain a healthy reservation bank, balancing wait times and deliveries until our supply increases with our expanding factory footprint. Turning to our P&L. Q3 revenue was just over $195 million, which represented a quarter-over-quarter increase of 101%. We remain intently focused on scaling the business and continue to expect to see significant growth in revenue as delivery volumes ramp. We're also excited about our recent launch of Lucid Vehicle Accessories, an expanding line of accessories that serve as a stylish complement to the entire Lucid Air vehicle lineup. In addition to the Lucid Connected Home Charging Station that Peter mentioned, we also announced a number of other accessories, including a cargo capsule that many customers have been asking for. Turning to our cost of revenue. Cost of revenue was $492.5 million, which includes direct parts, materials, shipping and handling, IT costs, overhead, personnel costs, including wages and stock-based comp, estimated warranty costs, and inventory write-downs, primarily related to reducing inventories to their net realizable value. Similar to last quarter, this expected increase was primarily related to personnel and overhead costs as we ramp up production, offset by lower freight costs quarter over quarter due to our ability to shift a vast majority of our international shipments from air to ocean freight. As we produce vehicles at low volumes on production lines designed for higher volumes, we have and will continue to experience negative gross profit related to labor and overhead costs. Additionally, we recorded a lower of cost or net realizable value adjustment of $186.5 million in Q3. This amount contemplates the value we anticipate receiving upon vehicle sale after considering costs necessary to convert the inventory on hand into a finished product. During this quarter, our LCNRV impairment increased primarily due to product mix and an increase in inventory levels, including firm commitments. Moving to operating expenses. We're still in the growth stages of our company in investing behind our strategic priorities, but we're doing this in a prudent and methodical manner. As I said last quarter, we're instilling a culture of cost consciousness, and we're working across the company to identify and execute on cost efficiency opportunities. R&D expense totaled approximately $213.8 million, up 7% sequentially. This sequential increase was related to the continued ramp up of the Gravity and Sapphire programs, as well as headcount growth to support further investment into our cutting edge tech and products, partially offset by lower cost stock-based compensation expense. SG&A expense was approximately $176.7 million, up 8% sequentially. SG&A consists primarily of personnel-related expenses, allocated facility costs, and other general corporate expenses. As we continue to grow as a company, build out our sales force, and commercialize the Lucid Air and plan future generations of our electric vehicles, we expect that our SG&A costs will increase. We ended the quarter with 29 studio and service centers, flat from Q2. We opened our first studio in Saudi Arabia at the end of October, as well as our first Texas studio in Plano. And we expect to strategically expand the number of studio and service centers with a number of new openings across North America and Europe through the remainder of this year. We increased our mobile fleet by nearly 10% in Q3, which is an important element in ensuring high customer satisfaction as the fleet of Lucid vehicles continues to grow. Our mobile vans can perform over 80% of the services that can be done in a service center. Stock-based compensation in the quarter was $83.3 million. Approximately $10.8 million was in cost of revenue, $34.1 million in research and development, and $38.4 million was in SG&A. Other income was favorably impacted by a non-cash impact mark-to-market value of private warrants in the amount of $140.1 million. The value of the warrant can be influenced quarter to quarter by a number of factors, including Lucid Group's end-of-quarter share price. Our overall performance in the quarter was a net loss of negative $530.1 million. Moving to the balance sheet, we ended the quarter with just over $3.85 billion in cash equivalents, and investments, with total liquidity of $4.2 billion when considering our global credit facilities. To continue to drive our growth plan and capture significant market opportunity we see, we do want to maintain the flexibility to raise additional capital. Our major shareholder, the Public Investment Fund, has expressed a willingness to support us in a future capital raise on a pro rata basis. We are incredibly grateful to have such a strong strategic investor as our partner. We are putting in place a $600 million at-the-market program, which will create flexibility for us to raise new third-party equity capital. Combined with a pro rata participation by the Public Investment Fund, this would allow us to raise up to approximately $1.5 billion net of fees and other offering expenses. The ATM program provides us with an attractive option to raise capital, but we have no obligation to execute on the program, and we will continue to be opportunistic in our approach to financing. This is consistent with our historical funding actions, including raising funds last year with a green convertible bond, and earlier this year securing a $1 billion ABL facility. Our strategy is to take a holistic approach towards funding the business. We believe we have access to a variety of available options, debt and equity markets, as well as access to low-cost government programs. We'll continue to be opportunistic in raising capital, and this ATM program is one incremental tool in our broader funding strategy. Turning to inventory. Inventory in the quarter increased due to a combination of our production volume ramp and vehicles in transit to customers. However, we reduced work in progress inventory by more than half relative to last quarter as we made progress on completing production of in-process vehicles from Q2. In Q3, we secured approximately 495 acres of land situated underneath our AMP-1 factory, and we also entered into an option to purchase additional land around our existing facility, further securing our future needs. Capital expenditures were $290.1 million in Q3. Year-to-date CapEx was close to $785 million. Our phase 2 expansion at AMP-1 is progressing, and we expect to begin moving air production into the south building in the first half of next year. Construction's ongoing, but we've started installing some equipment, and as we discussed last quarter, we're using a portion of our expanded footprint for logistics. Now, moving to our international expansion efforts. Just recently, Peter and I and some of the Lucid team were in the Kingdom of Saudi Arabia, meeting with government and banking partners in conjunction with the opening of our studio in Riyadh. We're already starting to realize the benefits of the KSA relationship and the $3.4 billion in economic support. We were happy to announce the signing of a memorandum of understanding with the Human Resources Development Fund, or HRDF, in Saudi Arabia, as well as the receipt of the first grant from the Ministry of Investment of Saudi Arabia, also known as MISA. HRDF, which is part of the National Development Fund, will contribute 75% of the training costs and salary support for more than 1,000 employees, resulting in an estimated contribution of more than $50 million over a 5-year period. This collaboration and investment from HRDF will allow Lucid to provide essential and meaningful training opportunities for Saudi nationals, many of whom have not worked in the EV space previously, and will be instrumental in making sure we have well-trained professionals as we launch Lucid's first international manufacturing location. We're thankful for the strong support and collaboration in the region and glad to see it all coming to fruition. Turning to the outlook, we're reiterating our 2022 production guidance of 6,000 to 7,000. We had strong production in Q3, and we believe we're on track to achieving this outlook. We ended the quarter with a little over $3.85 billion in cash and investments, which we continue to believe is sufficient liquidity at least into the fourth quarter of 2023. This assumes we are investing fully in accordance with our forward plan, which includes the phase 2 expansion of AMP-1 in Arizona, the engineering and prototyping of Gravity, the continued build-out of studios and service centers in North America, Europe, and Middle East, and some early spend associated with entering the Asia-Pac and China market. Moving to CapEx. We expect capital expenditures for 2022 to be around $1.2 billion. The reduction in CapEx guidance for 2022 is largely a function of timing and does not represent an overall reduction in the budget. Any dollars not spent in 2022 are anticipated to be spent in 2023, and a corresponding shift from the end of 2023 into 2024 is likely to occur. In closing, we're excited about our progress and the many exciting coming milestones in our roadmap. By the end of this year, we will have introduced 4 of our Lucid Air vehicle variants: Grand Touring Performance, Grand Touring, Touring, Pure, and Air Sapphire and Gravity are on the horizon. Our international expansion is also well underway, and you can see that we're starting to realize the benefits of our strong partnership with the government of Saudi Arabia. We can't wait to share more about some of these great projects that the Lucid team is working on, including our Lucid launch event on November 15th. With that, let me turn it back to Maynard to get your questions. Maynard?
Thanks, Sherry. We'll now start the Q&A portion of the call. Today's Q&A will feature some questions from some of our retail investors who are an important constituency of our shareholder base through the Say Technologies platform. We'll follow that by live analyst questions and close it out with a couple of Say questions if we have time. So let's start with the first question. What is the production target for 2023?
So we won't be providing a detailed outlook for 2023 today. We will likely provide this information on our next earnings call, which will cover our Q4 and full year performance and expectations for 2023. As we said in our prepared remarks, we're intently focused on ramping production. We have line of sight into our next incremental ramp up, and we're delivering as many vehicles to our customers as possible. So by next year, we expect to be producing our full line of Air, from our highest performing Air Sapphire to our most affordable Air Pure. And we plan to begin delivering some of these vehicle variants internationally. We're also planning on unveiling our Gravity SUV. So we're very excited about 2023.
Thanks, Sherry. We'll move to the next Say question. When are you planning to start building and utilizing the railway transportation in the Casa Grande factory to reduce transportation costs for suppliers and cars delivery?
Yeah, so as I mentioned, we're working across the company to identify and execute on cost efficiency opportunities generally. There's a number of opportunities we could pursue, in which may make more sense to pursue as we ramp volume. If it makes financial sense, we of course will consider them, including the use of the railway transportation, which is right in our backyard.
Yeah, and I think I'd like to add that Arizona and the city of Casa Grande have been incredible partners, and we're always looking for additional opportunities to drive our business whilst at the same time helping to spur jobs and economic growth in this region.
Thank you. And let's move to the next Say question. Looks like there's about 1,000 cars that have been produced and not delivered. Why is that, and where are these cars stored?
Oh yeah, well, I mean, this is a function of the cadence by which we've ramped up. We've made a remarkable strides in ramping up. And naturally, there's going to be a phase lag between producing the cars, and getting them out to our dear customers. So it's very much a cadence issue and a phase lag phenomenon.
Yeah, as I said in my prepared remarks, I mean, in the near to medium term, we expect vehicles produced to pace at a higher volume than vehicle deliveries as we're accelerating production, and we're also going to be initiating our international deliveries in the fourth quarter, and that requires longer in-transit time.
Great. Next question is, what is your current development progress of the current CarPlay version? Is it still planned to be released by end of year, and are you planning on partnering with Apple to add their upcoming fully integrated CarPlay in the next year?
Oh yeah, well we're most cognizant of the demand for this, and the team is working on it. All I can say right now is we're pushing hard to get it to market as soon as we possibly can.
Great. We'll move to the next question. The report of Q3 deliveries and confirmation of 2022 delivery targets was helpful. Going forward, does Lucid plan to provide more transparency to investors between earnings calls?
Yeah, so it is our intention to release our production and delivery numbers each quarter ahead of earnings in the hope of providing greater transparency. We know this has been important to the retail and the institutional shareholders, and we really appreciate your feedback, and I'm glad to have the confirmation that this information was helpful.
Great. I think we'll move to questions on the phone in the interest of time and getting everyone's questions in. Operator, Tawanda, if we could take the first question, please.
Thank you. Our first question, please stand by. As a reminder, ladies and gentlemen, to ask a question, you will need to press star 11 on your telephone. Our first question comes from the line of John Murphy. Mr. Murphy with Bank of America, your line is open.
Good evening, everybody. Just a couple of quick ones. Sherry, can you remind us of what you think the minimum cash level is you need to keep on the balance sheet along with liquidity? And how do you think about the key drivers of the improvement of cash flow through the end of next year? I mean, there's a lot going on here on product investment, capacity expansion. So, I mean, it would be understandable that cash burn would stay fairly high in this growth mode, but it seems like you're indicating that it'll improve materially as we go through the end of next year. So just curious on minimum cash and how we should think about cash burn improvement.
Yeah, so as I said in the prepared remarks, John, we've got cash of $3.85 billion already on the books. And then when you look at the availability under the ABL, available borrowing, that takes you up to $4.2 billion. And that's even before you look at the fact that we have access to the SIDF program, and that's the Saudi Investment Development Fund, which has $1.4 billion loan capacity. We've drawn down on none of that. And so as we expand next year, a lot of our CapEx is going to be kind of split between both Saudi and then also here in the United States. And so all those Saudi dollars we're able to draw down against the loan as well. So as we said, we're good well into Q4 of next year, so you can kind of complete the math there, kind of for yourself on, minimum cash needs. As for key drivers of it, we're going to continue to keep, a watchful eye on manufacturing overhead and labor, be looking at our BOM cost reductions, keeping an eye on things like raw material inflation. And then, of course, a big part of this is our intentional growth, right? We're deciding as a company to expand rapidly, quadrupling the size of our Casa Grande facility, and then also the big build out of our first international facility. So that CapEx spend is what's driving, a lot of this spend for next year. And again, that's at our decision.
Okay, that's helpful. And then just a second question around the product, Peter. You sound equally excited about the Sapphire and the Pure, which are kind of two ends of the spectrum for Air. I'm just curious, as you think about mix and pricing next year, if you balance the launch of those two products, one's at the high end, one's at the lower end of Air, still high, a high mix product. How should we think about that, Peter? And if you look at Sapphire, are there volume limits on that, or if the order book is thousands and thousands, will you fill that? Is there a limit on where Sapphire volume could be capped?
Well, I'm equally excited, John, for different reasons. I mean, the key message here is we're going to use our in-house technology to drive down the cost per mile of making an electric car through efficiency. And Pure is a big step forward and advance in that march. It's going to be an example of us making a more affordable car, a more attainable price point, and a fundamentally better car. We're going to get match the 4.6 miles per kilowatt hour that you see with the more expensive model with a Grand Touring. But we're also going to have a better rear seat ergonomics because we have a smaller battery pack. We're going to have class-leading range from this thing. I think it's just going to be an amazing product in a character of its own. And it's part of our relentless drive to make more affordable products. And I'm going to touch on that in my closing remarks. I think for Sapphire, it's really important because it's a halo product. It's our performance driver-focused brand. It shows how far the Lucid brand can go. But it's really important as a marker to demonstrate to the world the sheer prowess, the performance prowess, and the drivability that a state-of-the-art, ultra-high voltage, homegrown electric powertrain can deliver. I mean, Sapphire is the most satisfying driving machine. I mean, I've had the luxury of driving phenomenal cars throughout my entire career. I think this is truly the pinnacle of driving machinery. So there you have a really nice bandwidth from right up to $250,000, and it's a great price range to operate in.
Yeah, so we're going to continue to see strong mix with this, nice mix of products. And just a helpful indicator to you for informing ASP is the reservations book. And so we've got the 34,000 reservations that equates to greater than $3.2 billion in corresponding revenue. And so that's a helpful indicator as you're looking to build out your models.
That's helpful. Thank you very much, guys.
Thank you.
Thank you.
Next question, please.
Please stand by for our next question. Our next question comes from the line of Andrea Shepherd with Cantor Fitzgerald. Your line is open.
Hi, Peter. Hi, Sherry. Thank you for taking our question, and congrats on another strong quarter. I just wanted to better understand the CapEx. So it looks like the 2022 guidance was lowered to $1.2 billion from $2 billion. You mentioned on the call that this reduction is primarily due to timing. So I'm just wondering, I know you haven't disclosed the CapEx for 2023, but should we assume, an additional $800 million in CapEx for 2023, or how should we think about that as we go into next year? Thank you.
Yeah, no, thank you for the question. I'd be thinking more of it in terms of a shifting, the way that we estimated CapEx for both, kind of 2022 and as we look at it in 2023, we took a really conservative estimate of all of the exposure that we would have. But as the payment schedules come in, the work gets completed, it's been a little bit slower on the payment side. So that those dollars that are going to go into 2023, we see that a similar amount of dollars are going to exit 2023 and actually go into 2024. So we don't really see it as incremental per se. We see a little bit more as a shifting of dollars based on the way we did our computations for CapEx. Now we'll be giving some more guidance on that in February when we do our Q4 performance, and then also providing some guidance for 2023 then.
Got it. Thank you, Sherry. That's very helpful. And maybe for my quick follow-up is just in regards to the agreement with the government of Saudi Arabia for the up to 100,000 vehicles. I'm wondering if you can maybe give a bit more color there regarding the timing. I think in the past you've said that the vehicle deliveries for the agreement are expected to begin no later than second quarter of 2023, with initial orders in the range of between 1,000 and 2,000 vehicles annually. Is there any additional color there that you could provide, or just trying to get a sense of how to think about it going forward? Thank you.
Yeah, I would say that that's exactly right. I don't have any updates to that guidance. We were just over in Saudi a couple of weeks ago meeting with the Ministry of Finance on this very initiative. So we're firming up the details. We're starting to pick trims. We're working on schedules. So all of that's coming together really nicely. And that same number that we said, it's going to start a little bit slower. And remember, this is a 10-year agreement that they're making with us. So just a tremendous commitment from KSA, and that's going to extend across multiple of our vehicle variants. It's going to start with the Air and then move to the Gravity and also to the midsize platform thereafter.
Yeah, indeed. I think that, that 10-year commitment just underscores what a great long-term partnership that we've got, particularly with the Public Investment Fund. This is a long-term relationship. We're planning for a very successful long-term future together.
Wonderful. Thank you so much. And again, congrats on the quarter. I'll pass it on. Thank you.
Thanks so much.
Thank you.
Thank you. Please stand by for our next questioner. Our next question comes from the line of 𝗖𝗢𝗡𝗘𝗖𝗧 with Redburn. Your line is open.
Hi, thanks for taking my questions. My first one was on the order book. So maybe it was a bit surprising to see it decrease in length since last up. I appreciate deliveries were higher in the past 3 months than in prior periods, but I guess that still implies that order intake has slowed materially. Why do you think that is? And do you think that the order backlog will continue to decrease as you deliver more vehicles in Q4? Perhaps you could comment on what you think an ideal order backlog is for Lucid, either in units or days of sales.
Yeah, so, let me just add a little bit. Yeah, you absolutely understood it correctly. The reservations does net out all of the deliveries that we had in Q3 as well as up to now in Q4. We did have, some cancellations as well, but they've continued to be quite modest, low single digit percentage amount of cancellations. What we did see, just to give you a little bit more context, a lot of people are asking about this, is in August, after we announced the bring down to the 6,000 to 7,000, we think some of the folks felt that they might be pushed out a little bit too far, and we did see a bit of a spike in August, though still low single digit in terms of cancellations. But now that's normalized to a much more normal rate. We also think folks are getting excited for Gravity, and that's going to be coming here in early 2023, where we'll be opening up the order book. So frankly, Peter can speak to this as well, but I'm quite satisfied with where we are when you think about.
Yeah. Hi, Charles. Yeah, I mean, there's a good number to hear. We don't want people waiting too long. There's a perception here, the more is better. I think there's a good number. We've got great order book here. I think that some folks, we might have lost a few because our Q2 production was lacking, and there was perhaps an anticipation that the wait would be too long. But we're addressing that now with a dramatic increase in production rate. And also, as Sherry has said, I think the big one for us is going to be Gravity. Gravity is absolutely going to be awesome. And that many people are saying, look, I'm just holding back now. I want to see what this Gravity is going to be like, because it's really the SUV that I'm hankering after. And if that can deliver the same sort of space concept, the range, the efficiency, the performance, I'm waiting for the order book to open on that one.
Okay, understood. Thank you.
The cancellations too, we're finding as we do research on that, a lot of it's from the people that ordered early. So, what Peter's talking about that wait time and, the proper size, that really is important for us to manage.
Got it. Thanks. And then my second question on the gross profit margin. So despite the increase in volumes, there wasn't much improvement in the gross margin versus Q2. Could you maybe comment on that and sort of more big picture? During the de-SPAC process, I think your financial guidance at the time indicated that the gross margin would be positive once you were delivering 20,000 units a year. Obviously, a lot has changed since then, including the material costs. But is 20,000 units anywhere near the scale that you think you require to get to gross margin break even? And if not, how much higher?
Yeah. So first, let me comment on the quarter. So you're right, the gross margin did go a little bit more negative, but a lot of that's related to us ramping up the business, increasing the inventory. The way that lower cost or net realizable value calculation works is you got to take your inventory, you got to then assume that you put into that all the additional dollars needed to make it saleable. You look at what your mix is, and then you do that, that analysis for the impairment. So the impairment, had gone up, which is a big kind of driver of that number. We are seeing a lot of positive progress on the gross margin. As we go into next year, I'm not ready to comment on that fully yet. We're working through the budgets. We might provide some guidance on that in February. But a lot of the things that we're looking at is we're looking at for that continued ability to bring our BOM costs down, which we're continuing to see. We're also seeing that really coming into effect with our Gravity program as well, as we're sourcing some of the components. So as we're moving into the future, we're seeing that as well. And you're right, there are some things that are different than when we went out with the SPAC. The raw material prices have been high. We think they may have peaked in Q3, and we're starting to see what we believe is going to be some settling in Q4 and beyond, but that definitely hit us hard. And then also freight costs, although we've been able to do within our control to take anything that was in air and transport it to sea, freight costs are still high. So we're looking for that to continue to normalize, which is going to really start to enable the types of numbers that we were thinking about previously. So more to come on that probably in our next call. Thank you very much for the question.
Can I just sneak one last one in? The CapEx reduction for this year, what are the projects specifically that have been delayed into next year?
So it's more the payments, and most of the spend this year is based on our AMP-1 facility. So this whole quadrupling of the facility that's happening here in Casa Grande, Arizona, that's where most of it's happening.
Got it. Thank you.
Mm-hmm.
Thank you. Please stand by for our next question. Our next question comes from the line of Adam Jonas with Morgan Stanley. Your line is open.
Thanks, everybody. Just a question on cost cutting. You added about 1,000 new employees in the quarter. I'm just wondering, in addition to some of the delayed CapEx into 23 and 24, whether there's an opportunity to maybe slow that pace of hiring. Could we see some of the OpEx or the curvature of it also maybe be flattened a bit sequentially, or how should we think about that as you kind of plow forward with the quadrupling of the size of the facility?
Yeah, I think that's a keen observation, Adam. I'd say that we're keeping a really watchful eye on this, and we want to make sure that we are scaling in the OpEx, really commensurate with the progress in the business. And if the business is progressing at a certain level, we want to make sure that rate is matched up. So we'll continue to look at SG&A, in particular, but you remember part of the SG&A is the sales component, and that's us building out that footprint for our studios and our service centers, which is a really important part of our customer service experience. So we don't want to, cut ourselves short there, but certainly on other areas of the business, we're keeping a very watchful eye on spend.
Yeah, I think that's absolutely right, Adam. I think we're balancing our growth trajectory with prudence here.
You're going to continue to see as the revenue is going up, and with the doubling of revenue that we had this quarter, obviously as a percentage, the OpEx came down quite a bit, as you would expect, and we can continue to expect that type of, improvement to happen over time.
Okay. Thanks, Sherry. Thanks, Peter. Just the last quick one from me is thinking into 4Q, the LCNRV impact. You guided that you're still going to be having production over deliveries, and I think implying that as you ramp, you're still going to have, the carrying a inventory in the channel, even if it's not work in process inventory. But I'm wondering if the number you mentioned of, what was it, 180 some odd million, in the third quarter was something that could flatten, increase, or be a bogey we could think about as an impact into the fourth quarter as well? Thanks, everybody.
Yeah, it's a complicated calculation, but I would say it's going to likely improve over time as we continue to grow into, the full capacity of our facility, and before we start to activate, kind of new depreciation expense associated with, future expansion. So given that wouldn't be activated probably in the end of the year, you're going to probably see, quite a bit of improvement there. Also, as you start to maybe normalize some of the inventory levels as well, because remember, a lot of this is, kind of looking at inventory and taking a, kind of a reduction based on that as well.
Thanks, Sherry.
Yeah, thanks, Adam.
Thank you.
Please stand by for our next question. Our next question comes from the line of 𝗪𝗓𝗓𝗪𝗓 with Needham. Your line is open.
Good evening, everyone. Thanks for taking my question. I wanted to quickly touch on order book and potential revenues as well. The potential revenues dropped $300 million from approximately $3.5 billion in 2Q to $3.2 billion in 3Q. Third quarter revenues of $200 million do not explain the drop fully. I was wondering what the gap of $100 million here is. Am I reading too much in these approximate figures, or early high-priced orders were replaced by lower-priced orders during the quarter, or was there something else like impact of Forex? What explains that $100 million additional drop in potential revenues?
I'm not necessarily following it. Our deliveries increased by about double, and our revenue increased a little bit more than double. So we saw a really nice, linear relationship between deliveries and revenue. Our reservation mix continues to be quite high, right now, because, remember, we've been largely producing the GTs, which is one of our higher priced products, higher performance products. And as we move forward, we're going to start seeing more of the Touring and Pure entering into the equation. So you will see the mix changing over time, but then we're also bringing the Sapphire and some of the GTP in as well that does some counterbalancing. So I didn't see any kind of disconnect from my vantage point between the revenue number and the delivery number. Okay, great. And the second question was, I wanted to ask about the resiliency of this 100,000 vehicle order from the Kingdom. There is a lot of talk about Kingdom looking to have their own EV brand. How does it affect your relationship with the government? Is there increased urgency to deliver those vehicles quickly? Is there a sense of urgency to have some safeguards in place to protect that order in any other way? How should we think about that large order from Kingdom of Saudi Arabia?
Well, I think that it's testament to the long-term relationship that we have and the support that we've enjoyed from Saudi Arabia. I think we can very comfortably coexist with 𝗖𝗎, the other electric car company, and I think there are potentially some synergies with supply chain in the Kingdom as well. But I think that our relationship, it spans across many ministries within the Kingdom. They committed to 50,000 pre-orders, and with an option up to 100,000 over a long-term period of 10 years. So I am very confident, and I think we can very comfortably coexist and actually mutually benefit from each other's existence and growth.
Yeah, and I'd say that they really view us as, very vital to the growth of the auto ecosystem overall. And that's why we've had such a strong relationship building across SIDF, the HRDF, the Ministry of Finance, the NISA organization, and especially the Public Investment Fund.
Indeed. I think the other thing to recognize is we're in different parts of the market where we're true luxury or higher end. So I think we've got some sort of complementary strengths here. But I just think that, we can work together to reduce costs with the supply chain. I'm looking at a synergistic opportunity here.
Great. And if I can sneak one more in, Sherry, you mentioned that you will start international deliveries in fourth quarter. I was wondering if you can talk about what does it do to the margins, especially, your cost of deliveries will go up and US dollar is pretty strong. So how should we think about margins in fourth quarter with, higher hiring, higher headcount, international deliveries, and so forth?
Yeah, so we're just going to be starting the international deliveries in Q4, and that's going to be going to Europe and Saudi Arabia first. So we haven't announced all of our pricing in those regions yet. So, stay tuned for that, and you'll be able to see what we're going to be doing there.
It's a world of opportunity. That's the way I look at it.
Mm-hmm.
Great, thank you.
I'm sure no further questions in the queue. I would now like to turn the call back over to Peter for closing remarks.
Great. Actually, before we go to the closing remarks, and maybe we'll mix them together, let's go to one more question. And the last question in order is, do you guys plan to make cheaper cars like Tesla in the future? But this wraps in, I think, very nicely to another question, which is what can shareholders expect within the next year to 2 years from Lucid Motors?
Totally. I mean, this is what it's all about. Our vision is to catalyze and inspire and accelerate the adoption of sustainable mobility, sustainable energy. And to do that, we're developing our own ultra-high technology in-house to create more efficient electric vehicles, because not all EVs are created equal, and that enables us to travel further with less battery. And because batteries are the highest single cost item, that's where we can drive the cost of EVs down. That may seem a great paradox, because right now we're starting with a luxury product, but mid-decade we're going to bring our mid-sized platform in. That's going to be an awesome product and much more affordable. So watch this space. That's what this is all about, making EVs more affordable through high technology in this tech race. And Maynard, to that point, what do we expect to see? Well, I mean, this year we're going to see Touring and Pure. Pure is a particular favorite of mine. It's the elemental air, truly, and we're going to show more of that on our Lucid launch event in November 15th of this year. So please tune into that. And we're going to have Touring and Pure. Then we're going to have this monumental driving machine, Sapphire, which I'm personally testing, finding the performance truly satisfactory at the moment. That's going to come out in the first half of next year. And then the real big one on the near horizon, which is looming, is Gravity. And I think Gravity is going to be really transformative as a high-tech, high-efficiency, truly sporting SUV. It's a sporting SUV, and I just can't wait to show that to everybody. So that's planned for calendar year 2024, and we'll have a sneak peek of that on November the 15th, and then we will move towards sort of late mid-decade, mid-sized platform, which is what it's going to be about, the real gelling of all this technology to make a car which is truly much more affordable, mid-price range.
Great. Well, thank you, everyone. This concludes Lucid's third quarter 2022 earnings conference call. Thank you all for joining us today, and you may now disconnect.
Okay, so you get my voice again. So I guess first and foremost, some good takeaways from that is a lot more, I guess, based on the price point and the ramp up in production. We got a lot of analysts. I believe it was around 6, if I counted correctly, but 6 analysts asked questions. It definitely shows a lot of interest in Lucid. So again, that could be seen as a fairly positive sign. I don't know if you guys noticed as well, I was showing the dark pool transactions. There was one done pretty much during the earnings call, $2.59 million of a premium, but look at the price. It was almost $1.50 over anything. And keep in mind, this is the dark pool, so they dictate what price, but $13.50. That might be a pretty good indication of where we may go potentially. But I think generally these questions, I don't know if you guys noticed. Actually, I'll just turn this off. I don't know if you guys noticed my reaction, but this was not a good answer. What was your production target for 2023? And I even said that it would go down if they didn't fail to answer that. But yeah, they did say that they're going to wait till 2024 to actually answer that. Even though Adam Jonas seems to be having, like, he gives a lot of fairly low price targets, he did ask a very legitimate question, which I respect. He said, well, ties in with this question. 1,000 vehicles are basically sitting around because they don't have enough car haulers and various other things or the capability to deliver them all, which is fair. And obviously they're doing their best to rotate that. But with them ramping up, he said, do you not estimate that this kind of lag just to escalate? And which is a very good question, especially more so the production target right now for 2023 is set for 49,000. Of course, they haven't let us know or changed that, but that is a very good question. They are really bad at hiring. Please, Lucid, please, if someone is listening to this from your damn management team, hire someone who is an MC, for instance, that can actually like hype up investors, hype up the call, and actually not just fluff it up. A lot of these questions they fail to answer, and I have a lot of respect for Sherry because she's definitely the voice behind Lucid for the most part. Peter, he's a smart individual. I don't think he was right per se as a CEO in this role. Like, I think he should be maybe a VP of the tech aspect. But like them answering this question, I've done myself like hours of due diligence to exactly calculate how much costs by rail it saves. But what they said is that will look at it when they basically ramp up production. Well, what the hell are you guys talking about? You have 1,000 vehicles that are sitting there doing nothing. Why would you guys not look at other sources of transportation? And I used to work in that sector, so I know everything as far as what it entails. And yeah, it's significant cost savings. So they need to connect that. Like they're just really, I don't know. I guess it's kind of ironic. They kind of come off as car salesmen. They just like to showcase the positive and just ignore and brush under the rug and not even answer it the negative. But still some positive things, at least. They did say as far as a breakdown, so 600 million, so they did do a little bit more of a dilution, so 600 million, but they gave also an option for the PIF to buy an additional 915 million. So definitely that would be pretty good, increase the PIF's stake in Lucid, so that would give ultimately Lucid roughly about 1.5 billion. So that's very positive, hopefully enough so that that pushes it all back. Unfortunately, some analysts did ask a question, I don't remember who, but they said with this new I guess issuance, are you good for cash basically for 2023? And Sherry did say that they, what did she answer? That they did that shelf offering and that they will review it if need be. It's like, you don't answer, that's not an answer to the question. But after hours looks like it's going up to 12:05. So let me know guys' thoughts on that. David, yeah, leaving the question open is good, but if they consistently do that every single earnings, I don't like that. Like, if I'm asking a question, I want to know, like, what's up with that? Like, it's an interesting thing. You know what, given the circumstances, I don't think I would, for sure I'm not going to sell. Whether I add now or potentially see if it anticipates to go down a little bit more. We did bounce off of the previous low, pretty good support around the 1170-ish range. We did hit a crazy low of $11.48, so hats off to anyone who did buy at that stage. I did put an order in on this way up 1180, or 1182. It didn't fill, but I don't know. We'll see how tomorrow plays out. Keep in mind CPI is coming out on Thursday. That could rock everyone's boat, but I think us as investors, even though they're diluting, you're going to see a lot of people talking about this. In the end, Lucid needs money. They are still a fairly newer company, and newer companies need money. So we can't expect them to have gravity and so forth. in reality, sometimes I do pay attention to too much wording and how things are said. And clearly, based on the market price, it didn't go down when Sherry said it, but it was right at the end when they volunteered to ask some additional questions. And it was this question: how where was it? Do you guys plan on making a cheaper car like Tesla? And he said that they're going to be doing, he really talked on the Pure and saying that that is equivalent to 87,000 as far as the base for the Pure. That is going to be what he's kept talking about. He did say that there's going to be a mid-size SUV. He didn't mention a price point, but unfortunately, based on all the pre-existing news, it did say that it was going to be mid-decade, 2025, but he said, and this was Peter, near the end of the decade. So it does look like, unfortunately, like I said, I think a lot of people didn't really catch on to that, but most likely that is getting pushed back. So whether you take that as a positive, negative, I'm not here for that. I just like to point things out. So I don't know. Let's take a look. D-Rock, no, I have not. I actually have it set for November the 13th. So I'm heading over to Vancouver, flying out there just for the day, just to take a look, test drive it, film it, do all that fun stuff. And so yeah, I'm going to, this coming Sunday will be when I take a look at it. Yeah, I personally think this is a good buying opportunity at this stage. Let me know you guys' thoughts, if you guys would be buying at this stage, or I don't know. There's a lot of different moving parts, and I think this is the fun part of earnings. We all have different interpretations, some of which is bad, negative, what came out, some of which is very optimistic. So CapEx is going down, meaning they are becoming a little bit more profitable, or as far as efficient, if you want to call it that, per dollar. So they're improving efficiencies. Again, that's a good sign. You always want to see that. They're expanding. They didn't necessarily say, like, I don't know. I feel bad. Like, it sucks. Like, there was a question, are you planning on giving more updates in between earnings? And Sherry's like, yeah, we prior to our earnings, we disclosed the production and delivery numbers. It's like, Jesus Christ, like, are these people really legit think they're answering a question by that? It's like, no, that is not called answering a damn question. That's called a lot of every other EV in the market issues their kind of delivery and production numbers before their earnings, except Lucid. So Lucid just following the group. So I don't know. 5th time of me doing an earnings with them, and anyone listening from Lucid, you guys need to really just change that aspect. Like, answer the damn questions. Don't just fluff it up. And even that one's not even a hard question. Like, do more PR in between earnings, and it's like, yeah, we plan on doing that. It's like, that's the answer that we should do. But still, I think it's pretty good. Let's see. Yeah, looks like there was some pretty good bears in the chat though, but you guys are still talking about Polestar. Polestar. Oh yes, so that's a good question. So where do I see things as far as Q4 for price point? My own interpretation and how I see things, I personally think this week is going to be fairly negative, but tail end of November, that will be most likely the bottom in the market. So we should trend higher from that stage. Although I know a lot of people like to say recession and like a big recession is coming, the data is not really backing that. Like, it did at stages, showed some signs of cracking. It's not there. So I think CPI this coming Thursday might kind of rotate it and just cause a little bit more fear up until the next Fed meeting, but I don't think they have much more ammunition to raise it as high as they want. So I think the market is going to go up from here. As far as low, where we might go, maybe pre-test this again to 1150 potentially. But at that stage, it's all just more psychological levels. Honestly, if I was to put Lucid by the end of Q4, I would say around maybe the $14 mark, possibly a little bit higher, which I know completely sucks. I know when they were really ramping up production, and even when they were going on that massive price increase back in last November, I gave as far as a target, I would have assumed 100 at least, or around at least, I think it was 70. But clearly a lot of things were against Lucid. They didn't really do anywhere close to their actual initial production targets. And if anything, things didn't go necessarily right. And look at that, guys. Nice little bump up. $12.22 after hours. So yeah, it's going up. I'll just refresh this to see any more dark pool transactions. No, just the one, but still, like I said, $13.50, well above that bid in the ask. So $12.22. That was a pretty nice bump up there. So it's showing some signs of life. I don't see tomorrow we'll have enough to get back the 13, but might be a good day to accumulate possibly. And let's see. Yeah, open to the road, Lucid 11 or 10. Yeah, that would be an amazing buying price. So let's see. I'll give you guys a quick update on the short interest. So as of right now, still 100% utilization. Short score is 87. Short interest is 22.54. I've noticed typically this doesn't really update as fast. So I know after or during the market hours it's immediate, but after hours it's a little bit more lagged. So I'll post something on Twitter as far as the updated what happened during clearly the earnings call, if shorts double down or whatever it might be. I'll give an update on that. Most likely based on the price point, they were one of the ones that probably took it down at least. Clearly I could be wrong, but you know what? I guess some takeaways is that I think we already knew that Lucid isn't the most transparent. They don't answer the best questions, but given all the circumstances, I think they're doing okay. Keep in mind this 1,000 vehicles that's lying around. That's kind of out of Lucid's control. They really just escalated and started to ramp up really fast, and clearly they didn't have the controls to handle that amount. So that might be one point, something like I said out of Lucid's control. Yeah, it is what it is at this stage. At least they have 3.85 billion in cash. Clearly they are diluting to another 600 million, but even though they did say on the earnings call that they get an additional 1.5 billion, they get the 600 million. That's obviously what they've already done. But this 915 million is if the PIF does decide to buy that. So I haven't seen the prospectus on that aspect, on that 915, but we'll see. So as of right now, it's 600 million. In the actual earnings, they did say 1.5 billion. So yeah, it is what it is. I'm not too disappointed by the earnings. It could have gone a little bit better, but so could a lot of things. Oh, thanks, Sammy. You're the hypest one. See you, Shimar, or let's see, Michelle Francis. It went up because they gave the right answer to every question that they got. I wouldn't say right answer, but they did answer. That's one positive thing, I guess, if you want to call it that. I wouldn't say that they answered it right, because there was a lot of things that they failed to answer. Like, for instance, this one. Number one question, they failed to answer. This one, they said if they deem it necessary, and the costs associated. Well, you're having a lot of backlog right now, so it's all kind of linked. So it is very advantageous to do that. So what's the point in having rail there if you don't find it advantageous to some regard? They didn't really answer this question as well. So as far as CarPlay, they said it's coming as soon as possible. So that's not a really good question in my opinion. Does Lucid plan on trying provide more transparencies in between earnings call? Well, they said, well, we are giving you the production and delivery numbers before earnings. that was their answer. I think that's a pretty bad question. As far as this, the cheaper cars, they said instead of mid-decade, they said near the end of the decade. So mid-size SUV is going to be pushed back most likely. So I tend to disagree, Michelle. A lot of the questions were not answered. In my head, at least. But I agree. The PIF, I see in the chat, yeah, the PIF is going to take that 915 million easily, especially incorporating everything. So they have a lot of incentives for that they're paying and grants to have the facility built, and they're investing a ton of money in the PIF. So I think it's good. It'll be fine. Do you think they'll reach the 6,000 production given this rate? And assuming this is correct, that they can do 300 a week, I'll guarantee it. Math calculates that it will. So if this is true, even though some people I saw in the chat, this is why I like earnings, because it's different interpretations. I saw in the chat before it even started 300 a week. Some people said that it was good. Some people said it was bad. It's kind of funny, mixed, but yeah, if that is true, that they're doing 300 a week, then yeah, we are going to be, I think, around probably the 6,800. Maybe a little bit more if they do ramp up a little bit faster. So yeah, no, we're going to hit our targets. That's definitely. Laura, please do a DWAC video. Yeah, I can take a look at that. I haven't really, yeah. Ricardo, what happened to bullish mindset? You know what? I think he's doing fantasy football right now. But no, he's still part of the Lucid community, still invested. Just also on a side note, I think it's just it does suck, especially more so coming from a creator standpoint. Like looking at just this alone, like on a 1 year stance. Coming from a creator standpoint and trying to still be optimistic and still trying to do videos and still have that mentality when it's been this, like it's been hard sometimes, to say the least. So sometimes YouTube and other forms of media aren't the easiest. Yeah, David, yeah, PIF is definitely backing up and going all in on EVs. So that could be, yeah. And actually, Polestar does have their earnings on Friday. So this coming Friday, November 11th. So we'll see how that turns out. I know a lot of you guys are talking about Polestar. I like Polestar to some regard. Like I said from the beginning, there's different avenues that a company can choose. Is mass production, lower technology, or higher technology, lower production. That's the two in some. As of right now, I don't think we can rightfully say which is right or which is wrong. We'll have to kind of wait and see. I personally like to stick with the tech route, because even the Polestar 3 doesn't sound like it has that good of technology. But yeah, you're right. It was, I agree with you, PLLC. It was a better earnings call than normal, than what we are used to, at least. So yeah, it's not bad. It's fine. I guess we'll just have to wait and find out exactly what the breakdown of this 915 million is, what price point they're offering it at, or what price point the PIF can buy it at, or is it just market, and then as soon as they market it, like how does that all work out in the end? I don't know. I think it's a good breakdown, good eye-opener that, well, I guess one positive thing is they didn't really touch on China. So I guess that's fair to say. Like, I would assume that if they had a plan to have that China facility by mid-decade, which they did quote in 2021, they would have brought it up now. They can't just say in 2024, be like, hey guys, we're having a China facility starting in 2025. Like, that's not realistic. So again, I know some people are mixed. When I did do a video on that, some people really like China. think there is a huge demand for EVs, but some people, being an American company, they would rather not engage with in China, which I guess Tesla has had their fair shares of issues potentially, but yeah, I think this is going to be a pretty good fourth quarter, and we just need to really get rid of that backlog. I think that will bring in a fair share of revenue potentially as well, and yeah, we'll see how tomorrow plays out. My order didn't get filled, but yes, Lucidverse is still in on Lucid. Have a good day, Sammy. Jaren, Lucid SUV will be cheaper comparing. Yeah, they didn't really touch on how the Gravity is going to be for price point, but they did say that they're going to be touching on that. So clearly, like I said before, even the earnings, they most likely are going to have the Gravity for us to view. So that's the launch event on the 15th. So that'll be a pretty good thing. Actually physically get to see the Gravity. Again, hopefully they talk on the price point, what they anticipate to do that. But I don't think the Gravity is going to be cheap. If I was to put a price point, at least 110,000, maybe 110 to 130, ideally. But I could be wrong. But you know, it's all relative. John, or Let's Go Lucid, maybe you can. I guess you're so close to your goal for number of shares, so maybe you can take advantage of the dip tomorrow, reach your target for your share count, and I think tomorrow will be a pretty good day and might actually have one of Lucid's epic bounces potentially, so you never know. But with all of that, I think this might be a good ending point. Let me know your guys' thoughts. Don't forget to hit that thumbs up, subscribe if you guys haven't already. But yeah, I think this is pretty good. Tab, yes, you're right. Rivian earnings tomorrow. I like Rivian though. I like all EVs. I like anything that you can actually have a product and sell. So I know Rivian will do fairly good, but I think all eyes are going to be on their actual kind of their burn rate, because they've really struggled with that. Ricardo, I definitely could, yeah. I can give you a quick summary on that. But you guys have a good day. Thanks for all joining in. Another fun quarter, and hopefully Q4 will look a lot better. Don't forget to, like I said, hit that thumbs up. You guys have a good night, and let's all make a lot of money on Lucid, guys. One way or another. Eventually, long term. Okay, have a good night, guys.